Happy Friday to you, Art. Always glad to have you. Just give me your take, on the market action in response to that number and your response to the number as well.
Well, a couple of things. First of all, as a backdrop, I've been a little concerned for the last couple of days. We've gotten the VIX down to the 20 level, and all this year that's been a sign of complacency. And whenever we've gotten to 20 or slightly below, the market's had a pullback. So I think we were set up in a vulnerable fashion. The number came out, as you and others have noted, that the income part was a bit of a hot number. And I think you got a slight overreaction here until anybody who went back and looked at what Powell said in his commentary, he had kind of hinted at, and I think outright suggested, that there was concern that the payroll part of with the wages was still too hot, but he seemed to concede that at the same time he was going to go for 50 basis points. So I think initially the market was frightened that it might mean another 75, and upon reflection they're there. And then finally, David, I would like to point out we're at a very, very critical point here. The 200-day moving average in the S&P is right around 40.45. And if we close below that, I think that'll have some negatives. And if they manage to close above it, they might be able to steam up a little bit of a bounce-back rally.
Yeah, Art, it's Mike, and we're right there, as you know, 40.44 right here. So kind of playing with that level. We're up just a little bit on the week. And in addition to the 200-day average, it seems like if we went a good deal higher from here, a few percent in the S&P, it would kind of give people some belief on some level that, in fact, the downtrend in general had been broken. You have somewhat strong seasonals coming in later in December. And so people willing to give a little bit of a sense that the upside has some room. Do you think that that's a trap, or is that plausible?
Well, I still continue to believe, Michael, that we probably are going to retest the lows. So, I have echoed what everybody else said about the seasonals. I think you stated it very aptly that later on in December is when it becomes seasonally the strongest. So we have a little bit of maybe a 2-week window here. But I'm also concerned about some of the numbers we're seeing economically. We've got people starting to use credit cards quite aggressively, and a not widely noted thing. A sharp-eyed friend, Peter Bukvar, pointed out that people have begun asking for emergency withdrawals from their pension funds. And that, given the tax implications of that tells me there's some real pressure there. So for now, I think the market's going to keep the internals going, looking at that 200-day moving average. They manage to close above it. You might even get a bit of a sigh of relief, but I think we're still vulnerable here.